In the previous episode, we introduced the concept of strategic capital allocation and explored how this module will help us make better financial decisions. Before we begin evaluating investments, however, we need to understand why capital allocation is necessary in the first place. If resources were unlimited, there would be no difficult financial decisions. You would purchase every worthwhile investment, fund every opportunity, pursue every goal. There would be no trade-offs. But that is not the world we live in. Capital is scarce. Imagine for a moment that your financial resources were unlimited. Would you purchase your dream home? Of course. Would you fully fund retirement? Certainly. Travel the world, start a business, earn another degree, invest in the stock market, purchase rental properties, help your children financially? The answer to every one of those questions would probably be yes. Notice something interesting. There would be no competition among your goals. Every worthwhile opportunity could be pursued simultaneously. Now, let's return to reality. Income is limited, savings are limited, time is limited, borrowing capacity is limited. Every financial resource has a constraint. Suddenly, the question changes. Instead of asking, what would I like to do? We begin asking, what should I do first? This is the capital allocation problem. Notice something else. The problem isn't that the opportunities are bad. In fact, many of them are excellent. Paying down debt creates value, saving for retirement creates value, education creates value, investing creates value. Starting a business may create value. The difficulty is not identifying good opportunities. The difficulty is choosing among many good opportunities. Every allocation decision carries two consequences. The first is visible. It is the investment you choose. The second is invisible. It is every worthwhile investment you did not choose. This idea will become one of the most important concepts in all of economics and finance. It has a name, opportunity cost. Our next episode is devoted entirely to understanding that invisible cost. The capital allocation problem exists everywhere. Households decide how to spend income, businesses decide which projects to finance, governments determine where public funds should be invested. Investors decide which companies deserve capital. Every level of the economy faces exactly the same challenge: limited resources, unlimited possibilities. Strategic capital allocation is not about finding perfect investments. It is about making the best possible decisions when every worthwhile opportunity cannot be pursued at the same time. Understanding this simple idea changes the questions we ask. Instead of asking, is this a good investment? We begin asking, is this the best use of my limited capital? That single shift in thinking is what separates financial planning from financial strategy. In the next episode, we'll explore the concept that lies at the heart of every allocation decision: opportunity cost. I'll see you then.